How much money are they raising? So this is your checklist. Everything in green, you can just make your own checklist. They don't need to be raising peanuts. They need to be raising 250, million or more, and more is better. I really kind of like, 300, 400 million. If I see an IPS raising under 100 million, again, it's not going to stick around. It may show up down the road. It may become a investable company, but not in my IPO process.
It needs to bake.
Yes.
Yeah.
How about the roadshow? Was it good? There's some that are bad. After you've watched a few of them, you realize, hey, the guy standing in the corner with the Sunday school teacher's podium, that really wasn't a good roadshow. And there's really some good ones out there. They do some professional quality videos because that's their best chance. I mean, that's the chance for them to put their best foot forward. So it should be good. Is there a precedent for this company? Can I nickname the company? We'll come back to that when we get to Medline. Is the company founder-led? I mean, I think that when the visionary is still piloting the ship, I think that's a big deal. So OwnCloud, Kava, Figure, Bader, these are all examples of founder-led or somebody that's been there a really long time. And if I see a new CEO just came in the last 2 or 3 years, I pretty much know they brought him in to groom that company to take it public rather than to build the brand or the company. So just on my checklist, something that gets my interest. This is what you ask early. Where's the money going? Best is to expand and run the company. Going to pay back big debt is not as good. Again, none of these are red flag cancellation because there's no perfect base in CanSlim. There's no perfect setup, but these are key criteria I want to look at. So here's one where all the money went to the existing shareholders. So if you go pull up that chart, it's back under the IPO price and it's bad. So it just kind of confirms that. How did it trade? Not undercutting the IPO price is important. Some were that do that, but most of them that are going to do well, I really don't want to see that happen. But again, not a red flag, not a wave off, but something to pay attention to. What was the first day pop? So this is really our prior uptrend in the normal, I called it the can slime system since Steve Sweats named it that, and that's not copyrighted. Good friend of mine who I also learn a lot from. So that's our prior uptrend, and that's why I had it in that spreadsheet. I pointed out, hey, this one had 122% first day pop. So that's the 30% or more prior uptrend that we're looking for. So I want to see that. And it's easy to miss because you don't see that on the chart visually if you're not thinking about it. What was the first day close? We want it high in the range, especially on an IPO, not down at the bottom of that day. And these are really the things we apply all the time. Again, there's no perfect basis. So did the IPO increase in price or size? So that's called upsizing. So that's important. That shows excessive demand. A-Lab, which was tradable in the past, I know it's a bad chart now, that one increased in both price and size. Medline, which we're going to talk about in more detail, increased in size. What's the depth of the base? 20% or less is good. 15% is really better. If you go back to Google, that's the one to study. That's the one I dream about. That's the one I go back and look at. It was a 12.6% deep 3-week IPO base that broke out on day 17 and 18 of the base. So if I can find that. Also, I look for base symmetry. Does the volume decline into the bottom of the base and pick up on the right side? That happened with Google. These bases are like flying IFR. We're missing a lot of data points. We don't have the 10, 21, or the 50-day. We don't have the AD rating. We don't have any mutual fund information in the beginning. So what is important that you do give us is the UD ratio. So the up-down ratio. So we look for 1.0 better, and really on IPOs, I like 1.5 or higher. I want to see that number going up. Google was 3.6 and 4.7 when it broke out. So that's super strong and that's super rare. I understand, but
and for the non-pilots out there, what is IFR?
Oh, I'm sorry, instrument flight rating. That's where you fly in the dark. You can't see anything out your windshield.
Right. And you just have to look at the instruments.
Yes, versus VFR. So we only have a few instruments on the chart with IPOs. The quiet period can be important. See, what's the quiet period? I've never heard of that. So this is the period during which the involved underwriters who brought the company public cannot comment or promote the stock. And also they have restrictions on buying also. So this used to be 40 days. The SEC, I'm pretty sure, shortened it to 10 days, but everybody uses 25 days. So all the underwriters, it's my understanding, they have an internal agreement. They use 20, and it's 25 calendar days. So the quiet period ends, and all those underwriters, if you had 10 of them involved in that coming public, 9 of them are going to put out analyst reports on that 25th day, which normally falls on a Monday. They end over a weekend. So like with Medline, it had 41 underwriters. I think that's a record. And so it had, I don't know, over 30 reports came out when the quiet period ends. So I think that's important. I'll tell you what's not important. And some people are going to say, well, this is heresy. But the lockup expiration is not important based on my research.
And just describe what the lockup
So lockup,
is.
all the insiders. So when a company goes public, and this was a surprise to me when I researched it, normally they only sell, I'm going to say 13% to 17% of the stock. So you have insiders, and the people that founded the company own the other 80 something percent that is not on the market. And so when they IPO, that's locked up normally for 180 days. And so everybody's like, oh, there's going to be a flood of stock. This is going to be terrible. Well, I've looked at the lockup expiration on almost every IPO for the last going on 10 years now. And you know what? It doesn't matter for our stocks. If it's a true fundamentally sound growth stock that is liquid, the lockup period, it just doesn't make a dent. It's not like an earnings report. Now on thinner, non-profitable companies, yeah, it can make a difference. But if you hear somebody say, oh, never trade an IPO until the lockup period expires. Well, one, you just missed 6 months of opportunity. And number two, that person hasn't studied it. If you want to know the truth, I just kind of call bull crap on that if I see somebody say that.
Well, and this is, I guess, the benefit of your initial weeding process. Again, you're kind of looking at a subset, so yes, maybe the lockup period does matter for junk, but because you're already weeding the junk out, you're kind of looking at a upper echelon.
Right. I think the quiet period is a lot more important, to be honest. So what are our trading guidelines? Assuming you're going to try this and you're in the volatility zone, you're in the work zone, you get something that meets the checklist that we just went through. What are our rules? What's our risk control? Well, first, just trade half-size positions or smaller if you're newer to control risk. Second, don't do more than 2 of these at a time. That would be one full dollar. So if you have a $100,000 portfolio, you want 10 positions, $10,000 each, that would be no more than 10,000, 5,000 each in these 2 IPO bases. Again, I'm not talking about down the road. I'm only talking about this base. One of the rules we wrote in our meetup group, wait until at least day 7 in the IPO base. So you can buy early, but hey, don't buy before day 7. Plan on raising your stops and exiting fairly quickly. This is not the rule down the road after the due diligence phase. I draw on every chart a red line and a gray line on the ones I'm interested in. So the red line's the IPO price. I always want to be aware of that because sometimes down the road, somebody will be talking about a stock and I'll say, hey, did you know that stock's traded under its IPO price for its whole life? And that's something they don't look at because it doesn't show, but I have it on my chart. So something to be aware of. And then the gray line comes out of the life cycle trade, which is the first weekly close. I don't have a trading strategy around that yet, but I'm studying it and we're talking about it in our monthly meetings. Other rules I use here. What charts do I use? So the only time I really use intraday charts is on that, first IPO base, the true IPO base. And I like horizontal trend lines, sloping trend lines, even Mark Minervini's VCP or volatility contraction pattern. I most often see horizontal trend lines on IPO basis as forming somewhere where I want it. I like to get that toe hold early on these before it breaks out. Also, like Eve has talked about on the show and on your podcast, Eve Bobick, one of the authors of the book, a lot of times it takes her 1, 2, or 3 times to even properly get in and not get stopped out.